Happy Friday, everyone. Caveat emptor. That's the main thing for today. Buyer beware. It's funny when you mention that to people. Some people say that's the biggest cop out to say buyer beware. And other people point out the fact that, listen, if you're going to involve yourself in any kind of investing in any kind of market or buying or whatever else, whatnot, you should do a little bit of work. And yeah, fair enough. I agree to some extent. But we also need to have significant regulation because the complexity of products today is one thing. The sophistication of the investments. I mean, people are investing in fusion type companies and nuclear reactors that use thorium salt reactors on technology that they couldn't possibly explain just simply. In AI, where you're trying to say we're working on AGI, whenever neuroscientists won't even be able to tell you what consciousness is. So there's topics and themes that are really beyond the vast majority of people, never mind in hot debate at an expert level. And I don't mean an expert on TV level, but say on a nuclear reactor, which one's better? I mean, my comment on which nuclear reactor is better is so ill-informed and at a basic level compared to a level of nuclear engineers who are talking about specifics of structure and whatnot. So what I'm getting at is that there has to be a balance between regulation, making sure we've got a good flow of open business to get businesses going and encourage people to be in there, but also to try and quell what has resurged once again. And I'm laughing because I'm bouncing back between the two as well. So we've got all the scams, frauds, and meme coins and all the crypto stuff kicking off again, as if people don't remember that 98%, I think it was, of all crypto failed, was a fraud, was a complete disaster, lost people money. And that, of course, draws the ire of anybody in that space because they say, well, we're different. And listen, I work in mining. People say the same thing. Most of these junior companies will never go anywhere. They won't do anything. Yeah, but I'm happy to admit it. There's a way to funnel through and sort through which companies are a category A, B, C, and whatnot. And with this distinction, because we're going to play a quick little video here, we talked about on Wednesday the young man who made 30 grand very quickly while giving everyone the finger. And part of me, I cheer him on because I'm like, wow, that's extreme predatory capitalism at its finest. For him to be able to create the meme coin, create the audience, to do that, I mean, that takes a lot of work and effort and skill. And although it's diabolical, that's where we are today. We do have a world now of this whole crypto and Bitcoin and whatnot. And Bitcoin is obviously, it's over 100,000. It's making people money. And there's a distinction very quickly between all of them. And I'm the first to admit it. They're not all lumped together. There is a distinction between obviously how they work, the proofs from a Bitcoin to an Ethereum platform, and even Ripple. We aren't going to spend too much time because we're not in crypto enthusiasts. I'm simply just not. We have interest in following it because it is attracting the attention of people that would normally be willing to put venture capital into proper ventures. I think I've made my point quite clear on Wednesday, certainly in our writings, which we share. And I'm not saying people don't go ahead and put your money in it. Go for it. I mean, it's fun. It's exciting. There's volume. There's volatility. All the trading young men and women that would have been interested in my day in the futures markets and commodities and in leveraging an account to say on the futures exchange on soybeans or gold, even or commodities, whatever commodity, or options trading. They're all now just gung-ho into cryptos again. And I get it. Listen, it's pretty much unregulated. The classic pump and dumps work. And there's a reason why it attracts people. You're allowed to say whatever you like. You can make huge promises, and it's not because it's not a security. It's not sold by brokers. Now, that being said, of course, there is an ETF with BlackRock for some of these and other funds that provides you certainly much more acceptance and kind of safety. Let's just say safety. So there's once again the distinction, and I wanted to talk about it just in the case of risk, how we look at risk, and gold. I mean, if I even just ask ChatGPT what it thinks gold's going to do next year, it's pretty solid. Like here, price predictions, and I'll give you like Macquarie Group says it could go over 3,000. JP Morgan thinks 2,950 to 3,000. Goldman Sachs thinks about 3,000. Silver, JP Morgan thinks about 38. Saxo Bank thinks 40. Investing Haven, I don't know who they are, 50. That seems awfully high. But doesn't matter. Those are huge returns for a risk-adjusted inflation approach. These aren't investments. That's huge. So that kind of tells you the market we're in. And for me, you have to, what are you comfortable with? What kind of risk are you willing to step out in front of? And it shouldn't dissuade you. Hey, listen, there's lots of coins and whatnot, but I think what it boils down to is that what Victor Hagani said in an interview we did last year. And Victor, you can read about him in all sorts of books. He was cited in like Bonfire of the Vanities, kind of talked about this group of guys in the 80s and 90s. Fiasco is another book. There's a number of books that he's mentioned in because he was part of a founding partner of Long-Term Capital Management. And that was one of the biggest hedge funds, if not the biggest one in the 90s. He talks about it's not only finding the investment, that's a high risk profile, and there's plenty of math and probability involved. It's the bet size. So what you'll hear in the junior mining sector is just a rough, easy kind of way to evaluate this would be, say you had $100 and you're looking at the juniors, not the producers, or maybe even a producer, but it's a small producer, mid-tier, very small kind of thing, not the big producers. You're going to want to find 10 of them that you really like and put $10 in each. Probably 5 to 7 of those aren't going anywhere. Will be flat, maybe even negative. Some, if they're exploration companies, like nothing, they'll just fold. That's kind of, you're looking to get one out of that 10. That's a win, but it would be a significant win that would make up for the rest of those either losses or flat or whatever. And that's the model. So that's a very good example of what you hear people talk about, whether it's Rick Rule or investors in this space, is narrow down your list of 100 possible companies that have something tangible that you like, to then go, yeah, but let's get further down. What has scale? What has this? Have they had good results? Have they this and that? We'll put up on our Substack a little cheat sheet of things people should look for, but also like a very basic outline of what to look for grades, from whether it's copper, gold, silver. So anyone who's new, you can just get a sense of, listen, I don't need to be a geologist. I don't need to be an analyst. If this report says the gold per ounce is this with this width, you can know I'm in the running for something. And that can help people take that first step to narrow down, okay, I think I found 10 companies that I'm willing to put $10 in each and just watch them for the next year. And you can do that same kind of approach with any crypto. You can go, hey, I'll put $10 into Bitcoin, $10 into Ethereum, $10 into Ripple, or whatever one you want. The big difference, though, when we come back, when we compare the two, is can I explain mining and why it's important very simply to someone? Especially some people don't care about mining. They don't. We know that. But it takes no time for me to explain how we use these metals and materials in everything, even to make your cryptocurrencies, to provide all the energy, the massive energy drain that creating these coins costs. Which I always come back to is, wouldn't you rather spend that energy that they're making these coins with towards AI? Wouldn't that be energy better spent over there? But that's just me. Controversial take and topic. But these are some of the things we try to all tie into, because it is important to deal with this reality, real world, with a virtual one, because they are meshing. They are coming together, and saying that there's a nuance between the two. There doesn't have to be this big dichotomy that they don't get along. But I always kind of hearken in on this message is, if someone can't explain to you exactly what problem something solves, what good is it going to do, how it's going to affect you, me, anyone, the government, whatever, very simply and easily, then you're probably dealing with a pump. You're probably dealing with narrative. If you're promised in the future it will do this, that's not reality. If I tell you that in the future this may happen, I've told you we're talking about fiction. I'm trying to. It's not real. If I provide you exact data and show you, listen, silver is used in solar panels. This is how much China buys. This is how much goes into each solar panel. We're using solar power. It's a very simple narrative. I mean, it's easy to see. Yes, we use it. Here's where it gets refined. Do we have enough of it? No. Boom. That doesn't take a lot of work. And for people who are new, you can show them a pathway to go. Just ask ChatGTP. Like, go ahead. You don't have to put in any hard work anymore. Just ask it. Boom, 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 and it'll even cite where to go look. The reason why I'm kind of ranting like this is because we've got these tools, and we have a chance right now to not get carried away with the FOMO of the angle of we think because Trump and Elon are in power, and I kind of say that together, that there's going to be an integration and all these solutions are going to be made, and we're going to be living in a utopian nirvana moving forward. And hey, maybe they are going to come with a solution, but I don't see anything being proposed yet, other than the notion that $2 trillion is going to be cut from spending, which is going to be tough, and that's something we dive into in our Substack as well. And believe me, I'm all for cutting government spending, wasteful government spending. I think most, well, I wouldn't say that. A lot of people benefit from it, but it should be something people strive for, and that could be better allocated into proper projects and whatnot. But that's $2 trillion is huge to cut back. And if you put it towards this idea that we're going to have some sort of digital currency or the integration of Dogecoin, no one's saying that. There's been hints that there'll be something like that. That's come straight out of Elon Musk's mouth. There'll be something like that. But in any event, the big push in the whole Bitcoin crypto space, pushing Bitcoin over 100,000, is the fact that I think it's 200 here. Let me tell you the exact number here. I have it in one of our blog posts. Okay, you know what? I can't find it. I've got so many articles up right now, but it's something like 250 pro crypto politicians have been placed into the new administration moving forward, and 200 and something million was spent to get them in there. There's no doubt going to be a big push over the next 4 years. And I wanted to just then also remind people, I'm not saying all of them are the same. They're not. They're definitely not. Is there a role for smart contracts? 100%. Is there a role for blockchain in some? 100%. Is there a role for encryption? Yes. All of that. So I'm not suggesting there isn't, but 99% of these will be failures and frauds. And believe me, the pump is on. So I'm going to go to one extreme of that again here. And the fact that I even know who this person is, don't hold it against me. But let's pull up this Instagram here, Adam. This is okay. Before we start it, there's two people here involved. And I hate even saying this. The Hawktua girl, I think her name is Haley Jensen. I don't even want why she's famous is it hurts me because it shows where we are in society. But anyways, she's become famous as a meme for this saying Hawktua. You can go look into that if you want. Don't waste your time. But the person on the top of this video, CoffeeZilla, funny name, actually quite a valuable YouTuber. He calls out scams and frauds all the time. It's his business, and he's mainly right. I mean, there's some things he doesn't get, but for someone who's not in finance, he's not in the markets, he's never worked at any investment banks, he's pretty smart and he gets it, and he calls people out. And that's great, because you need to have, if the government's not going to keep people accountable for corruption, for crime, or anything else, If you have someone else shine a public spotlight on it, it's great. So let's get into what this is about, because what this is, it's a continuation of Wednesday's Let's Make a Meme Coin. Well, this Haktua girl decided to cash in. Not only has she got her own webcast, Spotify, everything, simply for saying something ridiculous and making tons of money off that, she decided to take it full forward. What happened in the last crypto pump, where every entertainer that you could think of wanted their own meme coin. Here, let's see what just happened here.
Hey guys,
what CoffeeZilla?
This is one of the most miserable, horrible launches I've ever seen in my life.
Okay, then why are you on?
I've been tracing it on chain for a while. You guys generated over $1 million in fees while y'all's fans got rug pulled. There was snipers, but there was also insider trading directly linked to y'all's creator account. What are you guys doing? You guys released 3% to the Meteora pool, while you have 17% of the token allocation unlocked day one from your strategic allocation. Are you guys insane? What do you guys think exactly is going to happen when your insiders get sent their tokens? And by the way, who made the money from your 17% pre-sale while you're giving a tiny piece of the pie to the public? This is the worst tokenomics I've ever seen, and it is a scam.
Okay, let's pause there. Wow, that sounds like the old 80s junior market scam. So this is a very, very quick brief, and I mean very macro level. How junior markets were well known when we had like the Calgary Stock Exchange, the Vancouver Stock Exchange. Some of the times these things would work is that you could create a company, get your property, issue yourself stock at 1 cent. You and the insiders, maybe you give the insiders at 3 cents or 4 cents. And then you get your property, put it in, you list it at 10, 20 cents, pump it crazy. So at the 20-cent level, maybe you raised $2 million, of which you're going to put 400,000 into the ground, 1.6 million into marketing, ride it up while you're dumping every single share that you have. That was easily remedied to some extent. Whereas today, if you're an insider, if you're management, if you're the person who created whatever junior, you've got a hold on your stock. Not only will the regulators be watching you, so you can't do it, but there was an easy solve for that to stop people from just creating these things, pumping them, and running. Once again, I'm being very general in this, but it didn't take a lot of brain power to go, okay, well, we can stop this very simply. So what they're doing with these meme coins is no different. It's the exact same play that a new generation isn't aware of. And because these things aren't very well regulated, because once again, we're talking semantics. What is it? Is it an asset? Is it a currency? Is it just in an entertainment product? Is it a token for a video? Like we're dealing with this kind of stuff where it sounds silly and pedantic and semantic, but it is very specific, because when the lawyers get involved and go, well, what is this thing? It falls into a category. And of course, all of the crypto as well as Bitcoin have been fighting, even though the original thing was that it's a currency. No, it's not a currency. We're not saying it's a currency, but it kind of acts like a currency. No, we're not saying it's a security, because then we get lumped in with being an equity and a security, and we're regulated by that. And we don't want that either. So we just say we're an asset. So if we get vague as possible and we convince regulators that we can call ourselves an asset like anything, like a pet rock or like gold, it's not revenue generating, then I can go ahead and market in the way that I want to. Now, of course, people say this is a very extreme example of the crypto space, but yeah, I mean, this was, I think, about a $50 million loss then, or let's not say loss. It's a zero-sum game. Her and her team's win at the expense of all of her quote unquote fans. Now, I'm not going to get into the weeds on this, but you can go to CoffeeZilla. He goes through the whole thing. It's wild. I mean, they charged a lot per transaction to buy, per transactions to sell. And when, if you're able to go into the market, you have all these free trading coins, and you dump it while she's on live pumping it, talking about all this great fun stuff they're going to do. That's literally a pump and dump. So I'm not saying all platforms and all projects are like that, but it's something to be wary of, and that's out there right now, and that's 50 million that could have been spent by any company out there doing interesting work in AI, in pharma, whether or not you like pharma or not, or in mining, to actually dig up some of these metals that we need so that we can have these meme coins. And that kind of rolls into something else that we're working on and we should have done by the weekend is we look at, which is becoming very interesting, and the narrative is switching around the Michael Saylor MicroStrategies. I think it's MSTR is the symbol for MicroStrategy. His entire approach of being able to convince people to give him $3 billion in a 0% convertible bond of, I think it's a 5-year bond to 2030. I don't have it in front of me. At a stock price of 55% higher. So the stock is somewhere around 320 right now. So it's 640 that they can execute. So they can take shares of the company. And it's unsecured. So this is not a bond secured by anything. It's just an unsecured debt that they're willing to give at 0% for exposure to Bitcoin. And once again, that's interesting because the nuances of taxes, of the product that he's created, and this is the narrative he's going out saying is, I'm creating new products that interweave with these the Bitcoin and crypto space with traditional finance, which is a very different narrative he had last year or the year before or anything else, and possibly more honest, I would say. But to look at that as well, if I say, sure, you sold it, people are interested in it, good for you. That's awesome. We show the chart of MicroStrategies, and if someone's a technical analysis or analyst, take a look at their long-term chart. Tell me what you see, what you like, what you don't like. And I'm saying that facetiously. We've got it on our Substack. It's the most absurd and ridiculous chart you'll ever see. And maybe that doesn't matter. Maybe everything's going to be great, and Bitcoin's going to be integrated and do this and that and everything else. You know, I don't think so. Do I think it's an asset? Yes, I'll reiterate that. The way I look at it is very different than other people, and it isn't slamming it because I think it has a value as a metric or a milestone to say how much does it cost to create technical advancement. That's basically all I see the utility of it. It isn't transactable. It's about 10,000 times less transactable than what we've got today. People will say, well, it's encrypted. Well, do you not think that Swift is currently encrypted? It can't handle volume. It's bad pricing when it is volatile. But that's regardless. The focus is on this, and money's flowing in because their money can be made. Now, it's an interesting conversation as well. Before I'm diverting off here, I had a conversation with someone to say, if you participate in something knowing it's a pump and dump, I'm wondering is that illegal? Like, I don't know. Like if all these people are saying, I know it is, I know this is just whatever. It doesn't matter if BlackRock's involved or not involved. They need to create a market to sell to. If you participate in it, what's the ethical or moral? I don't know. I don't know, because some people would say caveat emptor. I can just buy and sell something if it has values, not unlike the extraordinary madness of crowds and popular delusions of the 17th century with tulips. People, you could buy a tulip bulb for the price of a house. And we look back at that and think those people were utterly insane, completely nuts. Why would you ever possibly buy a non-revenue generating tulip bulb? What could it possibly have as a value? It had a value. The market was telling you it was worth a house. Now, any fundamental person who looks at it else would go, it's not worth that. How could it possibly be worth that? It doesn't matter. And I look at most of these projects, most of these coins, most of these things as, if you can't sit down and tell me exactly in reality, what problem does it solve that isn't currently being solved? How does it enhance or make better? And I don't mean, well, we've got inflation. That narrative we've heard a million times. We already have gold and silver to do that. And guess what? we can digitize that and we can provide a commodity backed blockchain with that. So why do we need a token attached to some other cross-border system that is going to be competing against Swift? What's the benefit to it? I don't know for sure. We're looking into it. And that's why, once again, this distinction between, say, a Bitcoin and Ethereum and, say, a Ripple, like we've been hearing all about this XRP Ripple coin, very different. Ripple is a company. It's got a CEO. Ripple was a software. It's actually the first of its kind. And it was set up originally by libertarian type anarcho-capitalists to compete against Swift, the system that the US kind of created and has agreement across the world, to say, well, we want a system outside of the system. It then attached a token, I think in 2012, after it saw the success of Bitcoin and saying, oh, this is some burgeoning new area that we can now apply a token to our software, which is actually can be applied, can be more efficient, and maybe has a place. So once again, that's very different. And often you'll find the people who like Bitcoin hate Ripple, by the way, is finding these things that actually solve a problem and who are they competing against. Like, I know I'm jumping around a lot, but if I said I want to create a new Google, you just laugh at me and go, that's ridiculous. You don't have, like, that's your competitor. Well, that's kind of like a lot of these. Like, you're saying you want to create a new Swift system. So you want to go up against the US government, against JP Morgan, against Goldman Sachs, every investment banker, all that brain power. And believe me, they're all looking at crypto. They all have very smart engineers and software engineers looking at these things. Do you really think they're just going to hand all that over to some private project? I mean, it's exciting. It's fun. It keeps things interesting, I suppose. I look at it as R&D like anything else. And the big brain powers, whether it's Elon Musk and crew, whether it's Vivek Ramaswamy, whether it's Peter Thiel, all of them are watching and they're looking to see what works, what doesn't, as well as their own teams. And will there be some sort of solution moving forward as a digital currency? Yeah, it's coming. I mean, sooner or later, I think everyone kind of sees that. We basically have, certainly in Canada, a digital currency. Almost everything we do is just tapping. And you can make the argument that we have one of the biggest reasons to not want it. We had an authoritarian regime that froze accounts immediately without even having to go to court, without anything. And a bank said, I'm happy to do it. So we have a case scenario of like, oh boy, this is what can happen. But luckily, we had a rest of the world that's connected that called that out and said, holy smokes, Canada, what are you doing? So the biggest fear when people say, oh, I don't want to have a digital currency, we're going to be connected. No. Yes, there's a dystopian view of what that looks like. And yes, it can go very bad. And yes, there could be some strange social credit score that would be awful. But at the same time, we've seen already some of the dark actions and we got through it. It's going to come down to trust, just as we have to trust that with a fiat currency, that the trust comes from the government that we have. Also from the taxes that are raised. Is it financially sound? That's big question mark right now when we're looking at the US with the heavy debt loads. This is why people are flocking to precious metals, why they're flocking to some other form, an outside virtual currency that's going to be integrated. So long and short, be wary, caveat emptor. That's what we always say. I think it's fun to look at some of these things. Do I think there's lots of money to be made? Absolutely. That type of trading is very different. You can go into forums and watch that type of trading. You can follow flows of money. That's a type of trading. And then hopefully get out and not be the one left holding the bag. There's all sorts of ways that you can make money. But just saying that something is going up, that doesn't mean that it has value. I know that sounds contradictory. But remember in the 80s, there was a pet rock. People actually sold pet rock. And once again, that might look ridiculous and sound ridiculous today, but we're selling pet rocks often. And if you don't know how it's generating revenue, what problem it's actually solving, and you're not really digging into the weeds, and it sounds more like, well, it's going to revolutionize this and do this in the future, and it's going to do this in the future, and then this will happen in the future, then you're not talking about anything real. It's not happening today. And that's important. When we're dealing with mining, we're dealing with specific physical reality. We need these physical things in order to make the chips. I mean, we talked about antimony, that the American antimony company. Oh my goodness, it's up again. I mean, because of these this trade war with China, saying they've banned all export of it. More of that's going to happen, and this is the physical stuff that we need. Even if you don't like gold, say for the fiat currency and the devaluation, and the fact that we have no end to data to support that argument. We don't just have 10 years or 12 years of data. Like, it's hundreds and hundreds, thousands of years. People for 6,000 years have used gold, even for just the simple reason that we like it in jewelry. It looks amazing. It looks fantastic. I've never seen what a virtual piece of jewelry on me would possibly look like. Maybe it's coming. I don't know. Maybe I need a better imagination. Anyways, I think when we look at things, it's easy to get caught up. Even myself, I feel the FOMO. I see gold pull back and all these things take off, and it just feels like I'm being gaslit again from the world. And I'm sure some of you do as well. But we have to remain vigilant and stay strong and not chase. Chasing is the worst thing that we can do. And we just remind people, let's look at reality, at the foundation, whether it's the foundation of our economic system, society, of the reality of the obstacles and challenges we have forward. What is always that base? It's commodities. It's always the base. There's no way around it. We can talk about all these cool, awesome projects moving forward, AI, nuclear power. We can talk about all of that, but that doesn't happen unless you have the supply, the demand, of these, as well as the logistics to get the uranium, to get the cobalt, to get the copper. That is the key here. And we have an opportunity here in 2025. I think we're going to see a good year of reminding people that we can be distracted with all the thoughts of robots and flying taxis and this vision of the world that might happen in 2030 or 2040. But it's going to take all these metals and minerals, and that market is totally punched out. It's to use a funny little term. And there's an opportunity there. So that's my long-winded way to promote mining as a sector, which I always like to do. But also to tell you, listen, just like this other sector, this crypto sector, it's a lot of lifestyle. There's a lot of nothing, but it's easier. And we're going to help you with that as well on our Substack. It's easier to identify projects that are real, that have real management teams, that are more likely to have a shot at success, and to better position you for the possibility to make bigger or asymmetric gains. That's what we're here for, is to wipe out the ones that you don't have to waste your time looking at too much, and to help you narrow down, like we started at the beginning to say, that $100 to spend in 10 different ideas, and to move forward with that. Anyways, everyone, I went on and ranted on a little bit too much longer than I thought. I think I got caught up on the Haktua thing. It got me too riled up. But listen, good times are coming. 2025 is going to be very interesting, and we're optimistic about that. And this, we're happy right now. And I want to wish you all a happy weekend as well. And we can tell now that I'm just saying the same thing over and over that I've run out of steam. And I wish you all the best. Take care, and we'll see you next week.